Okay, Ketav, stay with us. Vaibhav Agrawal as well joins in from Angel Broking. Vaibhav, what is your first take on Yes Bank? Looks like an inline set and more importantly, a stable asset quality from them this time.
That's true. In fact, I would say the numbers are slightly better than expectations. The NII clearly, is looking, more than what we were expecting, almost around, 6 to 7% higher. I think even the margins on a sequential basis have improved slightly. And at the same time, like you mentioned, asset quality on the net NPA, there is hardly a 1 basis points increase sequentially. It's actually better than what we have been building into our estimates for the bank, over the, FY 16-17. We have been factoring an increase conservatively, but the bank has actually, done better than what we were expecting.
Hemendra Hazare also joins in on the show, and the net interest margins for the bank, by the way, are at 3.3% versus 3.2% on a sequential basis. So I think that's pretty much in line with what we were expecting, and that also this time around has improved perhaps on account of the lower cost of funds. Hemendra Hazare is also with us to assess the numbers. Hemendra, Yes Bank, it seems on all parameters barring the asset quality, which has deteriorated marginally, has come in with a fairly decent set. What's your call?
Now, very true. If you look at these results, one would expect, you would believe that the Indian economy is doing extremely well and corporate India is doing extremely well if you go by these results. Although we know that corporate India is under deep distress and the economy is really going nowhere. So therefore, these results appear to be quite good, yes.
Okay, Ketav, I just want to come back to you. Okay, Ketav is not in line with us, but Vaibhav, just want to get back to you. What is it that you're going to watch out for from the management commentary, and more importantly, what is your own expectation in terms of the kind of exposure that Yes Bank has to stressed assets and what they're monitoring from that space, whether or not they're expecting ease to really come in, or do they continue to see stress come in sectors like infrastructure, steel, etc.?
Well, the management has earlier guided for an increase in their provisioning to about 60 to 80 basis points. We are also building in about a 140% increase in NPA provisions, on a lower base that they had in FY 15. There should be some amount of NPA increase during the course of the year from sectors such as metals, probably some amount of slippages from the construction space as well. But, the thing to keep in mind is that at the end of the day, Yes Bank is 1% of, the system. And the 80% is still with PSU banks, and that does give scope to an expert bank in structured finance like Yes Bank to sort of structure loans in such a way that, they earn good fee income and yet not end up with the same kind of NPAs like the rest of the system. So we do believe they have strengths in structured corporate finance. So we would not be unduly worried. I think they should deliver within their guidance of 60 to 80 basis points credit cost. And so long as they reiterate that, on the con call as well, I think broadly we would remain, positive on the bank.
Call and take a look as to how the stock is reacting, by the way, at the day's high right now for Yes Bank. In fact, I just want to just stand by with us, gentlemen. Just want to take a moment to address UPL's earnings as well. 275 crores is what they've delivered by way of the profit, which is below 290 crores on a year-on-year basis. And the consolidated sales, though, has been healthy at 3,010 crores versus 2,720 crore rupees. Perhaps, the Latin America business, the way Europe has been growing, all of this would have contributed to the numbers, and we will be watching out for more updates. But in the meantime, Yes Bank is clearly the stock in the limelight right now, and Poonam joins in to give us a detailed snapshot of how the earnings have been. Poonam,
I need to report some numbers before I
go ahead. Poonam.
Well, we are seeing good numbers coming in from Yes Bank. Very good profit, very good in terms of operating performance. NII is definitely above our estimates. But in terms of the asset quality, just a couple of points there. We are seeing the restructured assets rise pretty much for Yes Bank. We are seeing the total restructured assets standing at 567 crore versus a 382 crore on a sequential basis. Also, in terms of the gross NPAs, there is a marginal uptick even in terms of the gross NPAs. So although overall the performance is really strong across all the parameters, this bit is something that we would want to watch out for from the management. Even in terms of the margin, splendid margin performance, with margins increasing nearly 10 bips on a sequential basis and an increase in margin of nearly 30 bips on a YOY basis is definitely great. And also in terms of the overall CASA growth, we are seeing again a very strong CASA growth coming in at 5.6% on a sequential basis, and also the other income growth remains pretty much strong at 32%. So strong performance across the board for Yes Bank, but of course the asset quality comments from the management would be the key thing to be watched out for from here on, and of course the growth strategy as well as branch expansion plans.
Really well, Poonam, thanks for dissecting the numbers for us. So very quickly then, stable NPAs, PAT coming in line, and the NII is above estimates. That's the scorecard from Yes Bank. Let's just bring that up for the benefit of our viewers, a snapshot of the key numbers and how they fare as opposed to the street estimates. There you are on your screens. So clearly, Hemendra, want to come to you, not too enthused by the numbers. Do you believe that asset quality is going to worsen in the future quarters?
Well, if anyone had read the UBS report where it had included Yes Bank, that was not putting Yes Bank in a very favorable light. But these results, they showed that asset quality remains extremely strong. Earnings growth is also extremely strong. The only issue is that the broader economy and the corporates that Yes Bank should have an exposure to are not doing too well. So it has always been my case that I expect the corporate India's performance to deteriorate, and therefore anyone with corporate exposures will have to reflect that. So we have to just wait and see whether Yes Bank can, continue to report such robust numbers in such an economy.
I was wondering that you're going to pick that report up, Hemendra. But Vaibhav, what is your sense? Would you tamper at all with your year-end estimates and, call on Yes Bank, or would you leave it as is? And do you not foresee further asset quality stress in the next few quarters to come?
No, we also do see an increase, in their asset quality stress. As we understand from the management as well, some of the exposures in metal and construction, inevitably, there is likely to be some stress. In the metal sector, things have gotten worse even in the last 6 to 12 months. So all banks, not just Yes Bank, would see some pressure. But, on the other hand, as far as their exposure to sectors such as power, a big chunk of it is to renewables as well as, to corporate bonds, to, the top rated corporates. So not necessarily, the same amount of stress which other banks are seeing. Yes Bank would not probably see the same amount of stress in, some of their power exposures. Put together, still all said and done, we are also factoring an increase in their provisioning by almost 140%. We do expect their net NPAs also to increase somewhere closer to the 0.25 to, 0.3% mark. Even after factoring in these kind of numbers, we still expect around 17 to 18% earnings growth, which, in the current environment is still a pretty good growth rate. And looking at the bank's strength in corporate finance, looking at their growing retail portfolio as well, I think broadly we would still maintain a buy at, with a target of 989.
Okay, so clearly a bullish stance remains when it comes to Yes Bank, and additional details with the restructured assets, well, that's come in higher, by the way, at 567 crores versus 382 crore rupees on a sequential basis. The provision coverage ratio stands at about 71%. This is versus 72%, and as we flagged off, CASA ratio at 23.4%. Ketav, before we let you go, okay, just gonna get in a final word then on Hemendra, what your sense is on Yes Bank in terms of the overall numbers that it has delivered. You believe that given the fact that you were expecting a little bit of a slowdown, it has been a better than expected set?
Well, definitely much better than, because if you look at the macroeconomic environment and look at the corporates, they are in acute financial distress. But if you look at Yes Bank numbers, it would appear that everything is rosy in corporate India, and they have been able to cherry pick the top quality assets and lend to them. Because even the growth in restructure standard loan, which you have voiced as a minor concern, the numbers are not that, it's not such a substantial increase. Because if you see the pain in corporate India with some very large distressed, groups, are unable to service their debt and have been downgraded to default status. And again, if you read the UBS report on Yes Bank, one would think that they are looking at some other bank and not Yes Bank.
Fair point. Hemendra, Vaibhav, gentlemen, so good that you could take time out and analyze Yes Bank's performance for us. And Ketav, thanks to you as well. Yes Bank, what is the stock currently doing in trade? It's holding up pretty smartly as we speak. A nice over 1% move on the stock price right now. A good 2% higher actually, pretty much skirting at the day's highs.